Okay, I just wanted to do a quick video detailing one of my favorite strategies to use that can actually be used in a smaller account because of the buying power requirements that each position that you put on may require. But I have to give a bit of a caveat there. This is with Tasty Trade. And Tasty Trade is not like a bunch of other brokers that require you to have a certain minimum in your account. For Tasty Trade, you just have to have, for defined risk strategies like these, you have to have at least the max loss, or if it's a debit trade like this one, this trade is $112 to put on this trade. It's $112 at risk, because it's a long optionality, it's long delta. So that's positive, and that's 205. That's a lower number for a call buy to open. It was on March the 20th, and this one was sold against it at the same time. And all this 210 does is reduce the cost of this. But because Tesla had actually been running during this time, I was actually a bit bearish on the stock around this time. So I think I waited a few days. Yeah, March 28th. It says midnight because of the area that I live in. The market is open literally overnight. So it's actually really difficult for me to trade. I feel like I'd be a whole lot better with my executions and the fills that I get if I was awake or in a different place, but it's not a big deal. So anyway, this is for July. This one, I'm not going to say whether I still have the position on or not, because I don't want people trying to copy trade. But for this trade, I collected a credit. Now, I had to put up more. This one was a larger buying power reduction than this one, because I sold it to open the lower strike. I sold to open the lower strike call. And you notice this is a different expiration as well. So that factors into how much buying power I had to put up. Basically, it's just the difference between these two. 210 minus 205, it's 5. 5 times 100, that's the multiplier for options, is 500. 500 minus this 0.6 times 100 is 60. So 500 times 60, I had to put up $440 of buying power. Now, that doesn't mean that I am basically risking 440 exactly. And it's only because of this position here. This position would appreciate differently than this one appreciates if they're going in the same direction. That might have been confusing. But if the stock is going up, that's my primary view. I primarily want this to go up. But I really think in the short term it's going to go down. So to have a trade on, even though this isn't a full position size, so this is just a small position size. I don't want to say testing the waters, because that's stupid. I mean, that would be stupid for me to do, knowing what I know. I'm not necessarily testing the waters. I'm just getting a trade on in case I'm wrong about what I think my timing is. So I think it's going to be down in the short term. I might be wrong about that. So the ultimate position, or the ultimate direction that I wanted to go, is up. And I had or have until July to do such a thing. But this position costs more. They're the same strikes, but this one costs more because it has more time value than this one did. Now, I got it in March, but I had less than a month before it expired. So anyway, the reason why I said I like this trade is because, one, it reduces what I'm paying for the direction that I want it to go. If it does go in my direction, naturally, this one will be winning more than this one is losing, depending on how close it is to this expiration. But it doesn't change the fact that the totality of the two, the Tesla trade, is winning. It's up. Now, if it goes down, this one is losing, but this one has a whole lot more time than this one does. So this one would depreciate at a fast rate, and that's what I want, because I sold it for a credit, $60. So now, look what happened. Just April 2nd, just a couple days later, I sold that same one. So I bought to close, or bought to cover, for $10. I sold it for 60, and I bought it back for $10. So I made what, $50, right? So now what's my current cost basis? 112 minus the $50 that I made. Let's keep going. I'll look through, let's see, 1, 2. Okay. Oh, I did another one. Here we go. I waited a few days, as you can see. If you want, you can go to your your platform and look at what the chart was doing on that time, but I wasn't really trading based on what the chart was doing. I was trading the position. I was trading my view and what I think the stock is going to do in the short term, and it could have been based on a variety of things. I don't remember exactly what was going through my head on April 10th at 2:24 in the morning. I was probably really sleepy, and I was just like, oh yeah, let me throw this on, because my view hasn't really changed as far as the short term was concerned. And remember, my ultimate position, I had a lot of days left before that expired. But anyway, I sold another position. This is a different expiry now. The last one was April. This one was May. I sold it for $58, and I was able to close it in 6 days for $25. So did I make profit on that? And if I did, sold it for this much, bought it back for this much. Remember the multiplier, 100. That's $25. That's $58. So now what's my cost basis on this trade? You're starting to see a trend here. I'm putting myself in a position to not really have to pay to be long Tesla 205 and short the 210, because the most that these two can be worth is $500. That's the difference between these strike prices. The most that these two can be worth is $500. But if I already put up $112, basically it's 500 minus 112, and that'll tell you exactly how much 388. That'll tell you exactly how much I could potentially make on the trade if by this date, July 19th, Tesla closes above 210. You may have to rewind that, and that's okay. But I just wanted you to keep track of the cost basis. You may have to rewind and see exactly what's going on. Now, you may notice that I threw on another one. This was probably the last one that I put on. $46 credit. It was a $46 credit, and let's see, did I make some profit? Yes, I did. And I sold it for $17. Same one, July. And I sold it, let's see, this was the 16th, and this one was the 23rd. So now, if you scroll back down, remember the original direction that I wanted it to go. I don't care what this position does, per se, because I had so many different spreads that were at earlier expirations where I'm collecting credits to gradually reduce this cost basis. In other words, how much I bought this trade for, or how much I'm in Tesla for. Now you can add those up and yourself to see what I'm risking, but I think this video is probably long enough. I didn't mean to make it 8 minutes. I was trying to do 5, but hopefully this helps somebody and hopefully it makes some sense. But I have to say, the one thing that I didn't tell you in this video is why I put the trade on. I told you what my direction was, and I told you how I felt about Tesla in the short term versus how I felt about it in this medium term, July, from March to July. So, 4 months? So despite that, I didn't tell you why I put the trade on. And to me, especially after learning the education that I've learned, that's the most important thing about this entire process. The reason why you're putting the trade on. It's not enough to be able to structure a trade correctly and build up credits like this and take profits and pay attention to it. Because as you can see, I'm doing this like in the middle of the night. It's not enough to be able to do that. That's just somebody who's able to structure a trade in a decent way where you can make your original direction essentially a free trade. You're not paying to put it on, at the end of the day as it gets closer to this date, if you're doing it right. But I didn't tell you why I put the trade on. You need a comprehensive process that's repeatable in order for you to have confidence in every single thing that you're doing. Putting the trade on is last. Having the view, the market view, and then this view on this particular stock is primary. That's the first thing that we should do. And having a consistent, repeatable process will give you tremendous confidence. I promise you. I do not trade the same way that I used to. I do not just put on trades willy-nilly just to, I don't even know, just to gamble or just make a bet or just playing volatility like I used to. And that worked, but I just didn't have the same level of confidence or conviction behind it. And that's why it was so easy to close a trade before close a trade the moment I got just a tiny bit of profit. These positions, I let them play out because I have a specific view. And when that view is played out, or if my view isn't the same, I have to look at these positions and what they're worth the day of. You can look up this spread and see what it's worth today. And then I decide whether I would put it on today or not. And that'll let me know whether I should keep this position on or sell it. But I can tell you right now, the lower this becomes, the more I'm likely to keep this trade on to realize this potentially happening, it clearing my short strike and me making the max $500 on this position. Now, remember I said this was my first one. I didn't show you whether I have multiple or not, and I didn't tell you why I put the trade on. I'm not going to do that just because I don't want anybody copy trading, because that is one of the worst things that you can do. If you copy somebody else's trade, then it's that much easier for you to not have conviction behind it. And I'm a nobody anyway, so I know that probably nobody would be like, oh yeah, let me put this trade on because DeVell Wilson, Jack Mock, just a trader man of Christ, put this thing on. I know nobody's going to do that, but still, I just want to quell the temptation and make sure that nobody's tempted to do such a thing. But I just wanted to show a bit of structure that a lot of people don't really know about. I never really traded it. I knew how to do it, but I never really traded these or saw the benefit in it until I went through the trading courses that I went through. And because I'm trading so much smaller, they don't necessarily tell you to do it exactly like this. But from looking, taking the professional options trading masterclass that they have, I ended up basically making an abbreviated version of one of the strategies that they call a useful option strategy, because every option strategy isn't useful for a retail trader like you and I. But again, sorry for making this video so long. Hope this helps somebody. Hope y'all understand what I was talking about. Eventually, I may put on something saying why I put a trade on, but I will probably do that after I've closed it. All right, y'all. Take care. God bless.